Welcome back. David Reyes again here, your retirement architect here on AM 760 KFMB. If you're just joining us, I was talking in the first segment about, obviously, with the stock market's on everybody's mind. And we've had the worst start in the history of the U.S. stock market. I talked about the three main causes of the stress in the markets right now is, number one, we're long in the tooth in the market. We've had a 7-year bull market. Number two is we have China, which is just cannot get out of its own way. Their stock market is crashing. They're contracting their economy. They're the second largest economy in the world, the second biggest stock market in the world. We have oil prices, which are hurting. They're great for the consumer, but they're hurting our oil industry. And third, we have the Federal Reserve, which to me is just on the wrong side of this whole raising of interest rates. You don't raise rates when you have an economy that's really at stall speed at a growth rate of around 2% or less. The Atlanta Fed says that, which is the most accurate of all the Federal Reserves, predicts about a 1% growth rate for the U.S. economy. Typically, that's recessionary almost, and you don't raise rates, you're reducing rates. So the Federal Reserve's got this wrong for years. They should have risen rates 2 or 3 years ago when they could have, and now they're really on the wrong side of this. So those are the headwinds going into a year that is going to be difficult at best. And you need to be prepared for this. And unfortunately, for most of you, you're not. And, I look at portfolios every day for clients. And what I see, I always tease, I could line up every brokerage firm in the United States, and 9 times out of 10, they're all the same. Now, some might own stocks versus mutual funds versus ETFs, but there's going to be some combination of a stock and bond allocation. And that's okay. It's always good to be diversified, don't get me wrong. But we like to use what's called belt and suspenders. We want to have diversification for sure, but we also want to have other ways to protect downside risk. In 2008, if you had a balanced portfolio of stocks and bonds, you were down 30% during the low of the market, which was March of 2009. And your broker's probably telling you, hey, you're balanced. The market's down 50. You're only down 30. Aren't I doing a great job? No. If you had $1 million and you lost $300,000 and your broker said, I put together a conservative portfolio for you, I'd fire that broker tomorrow. Or if you have that broker today, you better reevaluate who you have. And we'll talk about the right advisor today because that's really important. Do you have the right advisor? The way I look at portfolios, and we have very unique portfolios. We call them the Reyes Retirement Protection Portfolios. Because the first thing we got to do, people come to us with money. They have lots of money. It's their lifetime savings. We're managing their entire estates. And so when we're doing that, we have to, first rule of thumb is don't lose money. We've got to protect capital first. You've already won or you're close to winning. All of our clients, our average age of my client is 67 years old. They're already retired or they're about to retire. I think our youngest clients in their late 40s, we only have like 2 clients that young. Young clients for us are in their mid 50s and those are rare too. But most of our clients average is 67. So they're either in retirement, near retirement, and they're looking for somebody to protect capital, to get good income streams, and to grow their money. In that order, that's our philosophy. That's just the way we manage our clients' portfolios. And think of it this way, every asset you own, whether it's your car, whether it's your home, whether it's your body, your health, you have an insurance policy for that, right? In case there's catastrophic risk. And my question to you is, do you have insurance for your portfolio in case we have catastrophic risk? We do for our clients, okay? So we use what's called institutional management. There's ways to create, and I'll give you an example of one. There's ways to create portfolios. It takes a lot more work than just allocating assets, but where we can actually limit the downside mathematically. For instance, one of our strategies is designed to where our maximum drawdown, 100% stocks. So we own 100% stocks in this particular strategy, and it's called a defined risk strategy. And the most we would lose historically is around 12.5%. That's in a market that was down 50, right? And we're going to give up some upside, but our maximum upside in this portfolio is 15 to 20%. So my question to you, if I could build a portfolio for you where you got basically almost all the upside of the market, except when you have these outlier years of up 30, which we're already past that, but you're going to get 15 to 20% on the upside, and you're limited on the downside to 12%, that's risk management, right? That is true risk management. And the way we do that is through using a type of insurance. And we're talking about annuities here. We'll talk about annuities in another segment here. We're talking about a stock portfolio, because you're going to need to have growth over time. If you live a long time, we've got this little thing called inflation. And basically throughout your retirement, you're going to need about twice as much income than you had when you started. And that's just because of inflation. Okay, about every 20 years, you're going to need about 2 times the amount of money. So we need to build portfolios that not only are going to grow, that are going to produce income, but that are protected against the downside. So if you don't have these types of portfolios, which I have never seen a client that has, give me a call and I'll do what I call our complimentary second opinion. And I'll look at everything you have. I'll look at your taxes. I'll look at your investments. I'll look at your insurance. I'll look at your Social Security, all these things. We're very blessed. I actually won for 2015. I got the Advisor of the Year for the National Association of Social Security Advisors. There was over 1,000 advisors across the United States that were nominated for this, and we're very blessed that I won. I'm not saying that to boast, but I'm letting you know that we get recognized for our retirement planning acumen. So it's not just me talking here. We get recognized for that, and we're very proud of that, quite honestly, because we don't just talk about doing planning, we do planning. So not only are we talking about investments, the investments, quite frankly, for our firm are the easy part. The harder part is how do we put together all these things that you have, the stuff you have, your Social Security, your pensions, taxes, your insurance, long-term care, all these types of things, your estate planning. So if you want to have a comprehensive retirement, investment, a life review, give me a call, 1-800-611-1967. That's 1-800-611-1967, or go to my website at reyesplan.com. That's REYES plan.com, reyesplan.com. And I will be happy to speak with you and see you personally. We also will be giving out today, which I do once in a while, the first 5 callers that call to set up their second opinion meeting will receive a signed copy of my book, Successonomics, that was written with Stephen Forbes. A great book. It was an Amazon bestseller. I'm not saying it's great because I'm in it. It's a great book. Steve Forbes is the main big kahuna, but it's a compilation of lots of advisors, about 20 advisors that are part of the book, and I was included and asked to be part of that. And it's just a really good read, and every client of mine or every prospective client has just said nothing but great things about it. So if you want to talk with me about anything, about taxes, about your investments, real estate, all kinds of things, give me a call, 1-800-611-1967. Again, that's 1-800-611-1967. Or go to my website at reyesplan.com. That's REYES plan.com. So I want to talk about, we're coming up against a commercial break here, but I do want to talk to you about, go a little further on some of the strategies that we'll use for clients, give you some more insight into this market, talk to you a little bit about target date funds. And I see a lot of you that have these in your 401k plans, and I don't like them at all. And there's a great article in the Wall Street Journal that talks about this. And they're very risky and very dangerous right now. So give me a call again, 1-800-611-1967. That's 1-800-611-1967. This is David Reyes, your retirement architect on AM 760 KFMB.
A well-designed, tax-free retirement. Tax-free retirement. And you can have it.
How come I didn't find out about this before?
The retirement architect, David Reyes, will continue next.